I think most money managers would be happy to close their books at the end of March, lock in the gains, and go fishing for the rest of the year, rather than risk giving it all back. Unfortunately, we don't know the answer to where we're going for here. We are clearly trading at levels that that not only are they all-time highs, but in the case of the Standard & Poor's, we're really just at the same levels we were at back in 2000. So in some respects, we really haven't gone anywhere. Yes, we've rallied very sharply off of the March '09 lows, but we've just rallied back to where we were in 2000. So I guess it depends on whether you view the glass as half full or half empty. And in terms of where we go from here, I will tell you this, that there is what I think is a very sophisticated risk on, risk off barometer that actually comes from Sweden. It's developed in Gothenburg from a company called Chellis, Chelys, and they had that index has been fairly bullish for many weeks now, and continues to be bullish in the sense that they are overweighted in equities and underweighted in both corporate and government bonds. And this is an index, even though it's interesting that it's developed in Sweden for the Swedish market and to a certain degree the U.S. market, it has been very accurate. And though I don't always agree with it, it seems to be right more times than I am. So I do pay attention. And it remains fairly positive going forward. But it's difficult for us as investors because the higher the market goes, the more concerned we get, because we don't want to be the last ones in. You know, we don't want to buy on the top and sell on the bottom. We prefer to buy on the bottom and sell on the top. And unfortunately, they just don't tell us where the tops are.
So what do you think? Where is the top?
Well, I don't know where the top is. I think that the positive bias that we've experienced so far this year will continue in some form as we work through the year, because number one, there are certainly signs that the U.S. economy is showing improvement. It's a slow process. It's sort of 2 steps forward and 1 step backward. But the real test, of course, will be corporate profits. And in 2 or 3 weeks, we'll start to see the results of first quarter profits. And hopefully they will come in better than expected and support current price levels. If that turns out not to be the case, it could become problematical for the market. At current levels, I think a lot of stocks are priced to perfection, which doesn't leave a lot of room for disappointment. And that is, in fact, the big risk that we all have now as investors, is that a lot of the good news has been priced in, and what we need to get the market moving higher is a continued flow of good news. And of course, that remains to be seen, certainly with first quarter earnings.